Alright, so in this one we're gonna talk about imbalance. Imbalance is a very important concept that we need to understand and identify it, because it's gonna help us find entries and also target. An imbalance, usually traders, they like to identify it on any time frame. It depends. For me and for us, what we're gonna use is daily imbalance, 4-hour imbalance, 15-minute imbalance, and then we're gonna go all the way down to the 1-minute imbalance. Every concept that I teach in this course and mentorship, we're gonna use it on any time frame we trade on. So we're always gonna keep in mind the 4-hour, the daily time frame for our bias, the 1 hour, the 15-minute, 5-minute, 1 minute. We can go down to the 1 minute or even the seconds to enter a trade. So it's important to understand all the concepts, because we're gonna use them on all the time. So trading is not just a big set of rules. Trading is something adaptable. Trading is something that you need to understand how it works. You need to have all the weapons, and then depending on the time frame and the situation, you need to know how to use them. So in imbalance, it's exactly what it says. When price has a big move, it creates an imbalance in the market. So if price only has bullish candles, then that's an imbalance. Or if price only has bearish candles during one move, then that's an imbalance. And price wants to come back to that imbalance in order to balance the order sheet. So that looks something like this. If you only have bullish candles with no wicks, a huge bullish candle, that's called an imbalance. It's an imbalance because there are only buy volume inside that specific area. And an imbalance is really easily marked. So let's look on let's start from the 4-hour, right? We can have imbalances on the 4-hour. So the way to identify, and there was only one type of volume and also an impulsive move. So let's take a look here. You see price came down with a big impulse, right? The imbalance is area where there's only, in this case, sell candles. So wicks on bearish candles, wicks are basically, it's buy volume, right? So let's look where we have no bullish volume. And the way we can do that is to mark the wicks. So we're taking the horizontal ray, we press Control or the magnet to mark the wicks. We mark this wick and we mark this wick here. Why this specific wicks? Because this is the last basically bullish volume that came in, and then we had the impulse candle, and then this week up was another bullish move. So this here marks our imbalance, because in this area there was only selling volume, only sell candles. So price wants to return to that area in order to fill it and balance. And you see what happened here. Price wicked directly into the area and then created a new low. It was a perfect imbalance. If you're trading higher time frame moves, it's nice to mark imbalances on the 4-hour and then eventually go down the time frames to find the specific imbalance. But 4-hour works really nice. Here you see you had another impulse, you had another break of structure to the downside, right? And the impulse candle, you see how it created an imbalance. So the way to mark it again is to take the candle before the impulse candle and the candle after the impulse candle and mark the wicks and see where there was only bearish volume. So in this case, it was something like this. Price came back a little bit into the imbalance and then created a new low. So let's go again. We have another break of structure to the downside and we have another imbalance created here. So we mark the wick, before candle, after candle. Price came exactly into the imbalance and then created a new low. You see? Now in this case here we don't have any imbalances left. So if we don't have, what we can do is go down the time frame. So as I said, imbalances can be used on any time frame. I like to use them on the 4-hour for bigger swings. If I'm looking for an entry on the 4-hour or an area to take an entry for, I like to mark the imbalances on the 4-hour, 1 hour, 15-minute, 5-minute and 1 minute. So let's go on the 1 hour and find an example for a bullish candle. Here there's an imbalance, you see. Price came down, impulse to the upside. We take the last candle, the wick here, in this case the wick up, and here the wick down, because this is sell. Here there were sells, right? Here only bullish volume. Price filled the imbalance and then eventually didn't continue higher because the higher time frame was bearish, right? So let's see another good example. Price was kind of bearish on Euro USD, so that didn't really work out, but we just try to identify the, here also you see a gap, and that's an imbalance. So price comes there to fill it and then gives a nice reaction. Let's go down on the time frames. Let's go all the way down on the 1 minute, because 1 minute is good. It's very good to identify imbalances on the 1 minute because you can take entries from it. So we do use imbalances to take entries from it on the 1 minute. So let's say we have a 4-hour zone where price comes in. Let's see if we have one here. No, not really. Okay. An imbalance on the 1 minute. It's very hard to spot here. Let's say we have an example. We had equal lows, price broke to the downside, it created imbalance here and here, you see. the big candle. So it's good to use imbalances when we have also POI. So our POI was this here, as I talked in the previous video, the last bullish candle before the drop. But we also had an imbalance here which was more aggressive, and price came there and then continued to the downside. Now, as I said, it's good to use imbalances when you have a big reversal, or basically when price taps your entry area on the 4 hour, you want to catch a reversal or something, then you should start looking on the lower time frame, on the 1 minute specifically. So here you see a big imbalance here, had a big move up, we created imbalance, price came into it, had a nice reaction, then continued down, filled another imbalance, had another reaction, and so on. So on the 1 minute you have a lot of imbalances, so it's very hard to understand. That's why I said, let's say we have a 4 hour zone here, you wait for price to come in, taps in, then you wait for 50-minute structure to form, 5 minute, and then let's say New Year session comes in, we start looking for entries. As I told you, we only look for entries during London or New Year session. New Year session comes in and you see 1 minute do something like this, spike down, New York open, goes back up again, creates a V shape. When there's a V shape on the 1 minute, usually it leaves an imbalance here. So price, you also have a flip zone, right, as I told you. So you can have a flip zone here, but usually it leaves an imbalance because price comes down to take liquidity and gives an immediate reaction, a powerful move to the other side. And usually that means it's going to leave an imbalance. And price usually comes back into the imbalance and then continues hard on the other way. And on the 1 minute, it's really easy to spot imbalances. It's not that hard. So let's take a look. As I said, imbalances are everywhere. Whenever you see a big candle in a direction or a break of structure, it's best to identify the imbalance, because there's a lot of imbalances. The valid imbalance is that which also creates a break of structure or a change of character. So not a random imbalance like this one, but here you see it created a nice reaction and then it broke down. It left this imbalance here with a POI above, and price did come back into the imbalance, gave a nice reaction. They came into the POI, which was this candle that took liquidity and then came down. So that's about it for the imbalance video. It's really easy to spot once you understand it. We're gonna put it in practice later down the line and you'll understand everything and how it works.